Live with Miami's Community News, and our special guest is real estate guru Peter Zalewski. Thank you for joining us, Peter.
Michael, it's always my pleasure.
Okay, I'm going to do a little background on you here. All right, see if I can get it right.
All right.
You're a longtime observer of Miami's condo market, for the most part on the east side, where people treat those condos as a commodity, not like on the west side, which are homes. And you are one of the most quoted South Florida real estate folks. Good for you, all right? If it's not true, I've made it up, all right? But it is true, all right? You're the founder of Condo Vultures, right, which is a licensed Florida real estate broker, and a former financial journalist who breaks down the complex real estate market. You've written for a lot of publications. Rattle off a couple of them.
I started off at Miami Today. If any of you remember Miami Today, I worked at the South Florida Business Journal. I worked at something called the World City. I worked at the Miami Daily Business Review, and then I wrote a column for 5 years for the Miami Herald and the Real Deal simultaneously. That was a challenge.
Can't keep a job, huh? Is that what it is?
I definitely can't keep a job.
That's why you got into real estate. But you reported on this type of things for a long time.
A long time, going all the way back to '93. I came down here to report on it. Right. So yeah, 30 years.
Is that right?
Yep.
That makes you about 45 or something.
Roughly.
All right, so there's been a big change in the market. I'm going to read a quote from your show. What show is this on about vintage condo sales?
It's probably on condo capitalism.
Okay. And so you have, what's your main website?
MiamiCondo.club.
Can we get that up there? There it is, right? No, then you're going to get another one up there. This is from your show. Buyers are clearly focusing on older vintage condominiums right now. We're seeing a noticeable increase in pending sales for these units as sellers adjust pricing and buyers look for value in a market where new construction has become far more expensive.
That's right. Sellers are heading for the exits.
Why? Why is that?
Ultimately, the cost of living in a condo has gone up so substantially right now. Many people are getting bogged down. They can't afford it. They know what the future is, and the future is probably they're going to get foreclosed either by their condo association and or by the bank. Many of them are trying to get out, and they realize we're in the winter. We're coming up to the midway point. If they don't cut bait and slash their price soon, chances are they're going to be stuck with this until next November, and many of them can't afford it.
And this is a cycle that occurs every year.
Yep. Yeah, we always go through this cycle. This one's a little bit different than last time. Last time was financing. This time it's the cost of living in a condo as a result of the Surfside collapse. So
you did a walk around. What was that called the other day?
Yeah, I do every Saturday from 10 to 1. I do walking tours of different submarkets.
Okay. In spite of the way you look, you told us a moment ago how many miles that tour was. How many? So the world's going to see it right here. Tell us, Peter.
Well, it's always roughly 4 to 5 miles.
And you're used to it.
Yeah, I like it. So well, listen, I've done 7 marathons.
Is that right?
Walking.
It doesn't matter.
It takes about 6.5 hours. But no, I love to walk. I haven't had a car since 2013.
No,
so
come on.
I walk a lot. I don't have a car.
Wow. We're sort of brothers in that. I used to do marathons.
Yeah.
And then I turned whatever it was. I said, all right, done, on to the next thing. We haven't figured out the next thing. But let's talk about who joined you on this last walk and what was it, where geographically, where was that?
So we met over at the Central Business District. We were right over there by the Overtown Metro Rail station. And then we walked basically about 4 miles or so. And what was interesting, it was primarily hedge fund people. It was a sold-out tour. We typically have 10 to 12 people, and sold out. I had people showing up, paying me cash to go on the tour, and we basically took them around. We gave them a list of all the condo projects in that area, and then I taught them how to analyze buildings. Because, listen, here's the mistake everybody makes. They search for a condo, and they look for a unit. The problem is there's too many condo buildings. So what you need to do is you need to find buildings that make sense, and once you have buildings that make sense, then you drill down and you look at the unit that actually is something that could work. And what do I mean by make sense? Maintenance fees, maybe the pet restrictions. Maybe it is they're going under some sort of special assessment. So you got to find the buildings and then figure out which unit is going to make sense. If you were driving
down the street and there were 2 buildings about the same size next to each other, the condo fees very similar in that case, meaning if it's a 3-story condo building, they're going to be about the same.
It depends. It depends. Like when that developer first went into the project, if it's newer, that developer might have signed some sweetheart deal because he was getting greased by the service provider. Could be the internet company, could be whatever kind of property management company. Property management companies will differ dramatically. What kind of, you want white glove service or do you want something very minimal? Same way you can go to like a fast casual restaurant, or you can go to like a fast food type of restaurant. So it really depends dramatically. The thing is, what we do with the tours is we give people the benchmark, the baseline, and then from there they can kind of make their adjustment, whether it be pricing, it'd be maintenance fees, it'd be anything like that. So these condos are dramatically different.
So the vintage condos, or how old are they?
30 years or more, and it's all based on a milestone inspection, which is now required because of legislation due to Surfside, where the 100 people died and $1 billion was paid out to the families.
So before it used to be, the first one was 30 years. Was it always 10 years after that?
Well, what it was originally is back in 1974, there was a office building that collapsed on Biscayne Boulevard right by the Adrian Arts Center. And once that building collapsed, the county commission made a decision to say, hey, listen, every 40 years, we need to make sure these buildings are safe. Then we had a 40-year recertification here in Miami-Dade County. And Miami-Dade County, for the most part, was very proactive in terms of evaluating the buildings. Once Surfside collapsed, the state adopted rules that says every 10 years, you have to do something called a structural integrity reserve study. And at year 30, you got to do this milestone inspection.
Is that like the 40, instead of a 40 years, the 30?
Well, 40 years is still in place, but now it's layered. Now it's statewide. Before it was only the 40 years in Miami-Dade County.
They have to do a 30-year and then a 40-year?
Every 10 years, you have to do a structural integrity reserve study, and then at year 40, Miami-Dade County also requires its 40-year recertification.
So you have to do a 30-year, and then 10 years later, which is
10 years, you do your structural integrity reserve study. 20 years, you do your structural integrity reserve study. 30 years, you do your milestone inspection. 40 years, you got to do a structural integrity reserve study for the state, and you have to do the 40-year recertification for the county.
So is there a particular inspection that's easier to pass, if that's such a thing?
Generally speaking, from what they've told me, that the one that's done every 10 years. That's kind of an eyeball. You go in there, you check it out. It's done by a licensed architect, licensed engineer. They go in there, they eyeball it. They give their estimates over to the finance people, the money people. They put a cost to it. It's all put together, reports given to the association. Association now has, as of 2026, they got to start funding it. Whether they collect reserves, typically they give you a year, and or they have to take out a loan from a lender. And increasingly, the banks don't want to do it. They're putting it on the Wall Street type of private money, which means a very high interest rate. One guy who owns a property management company, he told me the interest rate was about 9%. Mortgages today are about 6%, just to show you the premium that's being charged of these buildings. And as a result, it costs more to live in a condo because you got to pay for all this stuff.
So if you live in a 4-story condo and they got a 10-year coming up, what's the anticipated cost on average?
If you're coming up to the year 30, you're probably looking at $25,000. If you go from, let's say, 5 to 14, call it $65,000, and then north of 15 stories, $100,000.
So
no questions asked.
This guy's got half his mortgage paid off, right? He's living life. All of a sudden, here comes a bill for $25,000
minimum.
So,
and by the way, anybody who's done construction knows takes 3 times as long, costs twice as much. So once they open up a wall, they find something they weren't anticipating, and the contractors like to work the edges so the dollar amount might be going up. But I will tell you, every 10 years, you are getting a special assessment. I don't care what anybody says, anticipate it.
And so you either have to do the condos. Will the condos let you pay it monthly, or do you have to fork over the money?
Typically, what happens is you get 1 year to pay. So if the association adopts it, you have 1 year to pay. You're making these monthly payments. If you don't pay, then ultimately the association will move to foreclose on you. And the association will end up with it, and then a short time thereafter, the bank will figure it out, and then they'll foreclose on the association and then get it. So the whole thing gets messy. But in the meantime, the association, for the most part, what they do is they rent them out. But check with your attorney. I'm not practicing law. Your attorney can tell you. But generally speaking, if you're not paying your maintenance fee, what's happening is fewer people have to basically cover the cost of the overall building. And as that happens, you start to cut services, you reduce other things. Some people fall out. And that's what we call the condo cliff. You're standing there on the edge of a cliff, and everybody else around you is going bad, and now you somehow got to keep it going, and that's the drama, that's the stress, and that's why people are heading for the exits in a big way.
Wow.
Yeah, it's fantastic time if you're a buyer. Fantastic time.
And why is that?
Well, like I'm doing a tour this Saturday on South Beach. So we're running the numbers. If you go into a vintage condo, 30 years or more, the average asking price is 52% less than the marketplace. 52% less. So if you want to live in South Beach, you go into one of these vintage condos that has a signed report by a licensed architect, licensed engineer. You know what it's going to cost. You put whatever the special assessment amount is on the seller. You're getting in there, the seller's covering it, and you're basically in the market for half of what it would cost, generally speaking.
Are sellers going, I'll take a $20,000 hit, I want out?
A lot of them are. I mean, I think I told you on one of our previous discussions, I got a buddy picked up 3 condos. He paid $230,000 for 3 condos with a street value of $825,000. People they want to get out because they know it's just endless. They got to come up with this cash. They're probably going to get foreclosed. Give me some cash. Let's call it a day and move along.
So there's opportunities on both ends. One,
Yeah,
for a seller to get out facing something that he probably can't handle, and then a buyer says, "I can handle this."
Yeah. If it's new money coming in, they have the wherewithal. They have the optimism. But here's the only thing I would point out: if you do go on one of these vintage condos, general contractor told me when they're doing the restoration work, it's about every $2 million of cost is going to be about a year of labor. So if they're running behind on this labor, you might be out at the pool on a Saturday or Sunday, and some guy's swinging a hammer or using a jackhammer while you're trying to enjoy your pool. And keep in mind, when they work on balconies, they typically close your balcony 6 months to, this weekend, one of the people on the tour, they told me their balcony was closed for 2 years. They couldn't get in the balcony. It was all boarded up, and because all the work was being done. So, there is a push-pull.
For every $2 million, it's a year.
It's a year of labor. Year of labor for every $2 million, according to a general contractor who does restoration work.
Amazing market. So
Yeah.
I understand the county's going to have another 1,900. Is it condos or homes in the next year?
Ooh,
Is that done?
I haven't seen that statistic, but it wouldn't surprise me. It would not surprise me. There's this whole movement towards trying to bring new housing, which at the end of the day, you don't really need. We're going to get a washout in the condo market, and then you know what everybody's talking about? How cheap everything is. Right now, we're talking about affordability. When it all gets blown out, everything suddenly becomes reasonable, and everybody living in the fringes out in these western suburbs, maybe they don't want to be, then they have the opportunity to kind of move in. The problem is the seller takes a haircut. Now, I'm not saying they need to take a haircut like mine, but they're going to be taking a haircut if they want out. Otherwise, they're simply going to be subsidizing a renter along the way, because the cost of living in one of these condos is far superior to what the rent is generated. So anybody looking right now, go in there and rent a condo. Do not buy the condo unless you're able to get a significant haircut on the price. And how do you know what the price is? Well, whatever your rent is, that should represent 1% of the value.
So if the condo is rents for $5,000 a month, that's the market price, $5,000 a month.
It's worth $500,000. Now, the person who owns it's going to tell you it's worth 1.5.
Of course.
Yep.
What is that the same application for single family homes?
Single family is a little bit different because these are more work of arts. This is like everything. It's like a Picasso or, Jackson Pollock. It's going to be different. A condo is just a commodity. It's like when you go shopping for salty snacks or orange juice or milk, you're going to go market after market after market, whether it's Publix, Sedano's, anything like that, and you can figure out kind of what the market is. On the single family house, it'll differ a little bit. Size of the lot. Does it have trees? Does it have a puddle in front? How far is it from the main thoroughfare? Which school district? Condos, it's all the same.
So let's say it's a 3-story condo, and could there be 50 units in a 3-story?
Yeah, typically what they do in a 3-story, they won't have an elevator. And if you're a buyer, you don't want an elevator. You don't want a swimming pool. You don't want amenities. Why? Because all of that costs. If you're able to buy into a condo where you don't have any amenities, your maintenance fee is going to be much less. Now you have a better chance of actually making money, where if you have all these amenities and it seems great, it's kind of like having a boat. You know how they always say you don't want to own a boat, you want a buddy who's got a boat? Well, that's exactly what you want. When you're buying, you don't want amenities. When you're renting, you want every amenity possible. Therefore, somebody's going to pay or subsidize you to live in it.
I had my 2 happiest days in boat life: when I bought it and when I sold it or gave it away.
Listen, there's a lot of condo owners right now who are sort of having that same experience as we speak.
But that really hasn't made, other than you, I don't hear people waving that flag.
Well, because people are on the sell side. This is a sell side market. What I mean by that is their job is to promote and try to get the highest and best price possible. And as a result, everybody's moving in that direction, including the government. The government lives off of property taxes. So the higher the value. Remember, 2% of your property tax is going to it's going to be split between the school, the county, and the city in which the property is located. So everybody benefits if the prices go up. And that's why we keep it going up.
Can we put his website, run it across? Which one we want, the condos?
You could go. We're gonna put up the charts or website.
Yeah, let's.
Yeah.
Well, let's go to. Okay, that's your website, right?
Yeah, MiamiCondo.club. That's right.
You want to look at the charts?
Yeah, if we show the charts, people will get a really good sense of how what's kind of happening right now.
He's going to try to find them in a second.
No, that's awesome.
Is that you?
No, that is not me. That is not me at all.
Out of the desert or wherever that was.
But you know what's kind of happening, Michael, and looking at the statistics. So typically the midway point of the winter buying season is going to be about, symbolically, it'll be the Coconut Grove Arts Festival, Miami Beach Boat Show. That'll be going on President's Day weekend. But we're getting right to that midway point because November through April is winter. And many sellers on going into the season, they're very confident. They think that their condo is great. They think their kid is on an honor roll. They think that their son or daughter is excellent at soccer. They think their husband or wife is the best. They think all of this. And then what happens? Midway point, they pivot. because a realtor tells them, listen, we are overpriced. We got 3 months left till it starts to get hot and humid, till the hurricane warnings come and nobody's coming to town. And then you know what happens?
And that's accurate.
That's the way it always plays out. So these people who are getting out now, they don't want to be the last rat on the sinking ship. So they are trying to bail, and they're trying to get ahead of what's ultimately coming.
I do want to point out to our audience that this chair is empty. Our good friend Oscar, I won't say his last name, Musabe, he unfortunately was stuck in traffic, which I'll find out later. So, Oscar, thanks for joining us.
Thank you, Oscar. Nice seeing you again.
So, can we put up some charts? All right, let's see. So before we get to that, even with this going on, there's lots of development still going on East Side.
Yeah, a lot of development that's occurring. That's all development that was already in the process. Remember, it takes 3 to 5, 7 years to build one of these projects. Oh, no, I think these are different. Yeah, these are way different. Yeah, no, it's 3 years ago.
Okay.
No, we can forget the charts.
Okay,
Not a big deal.
So those are already in process, but when they come online, when are they going to come online? A year, 2 years down the road?
Well, here's the thing. We just did the Central Business District for our walking tour. So you got about 10,200 units. You got 4,300 under construction as we speak.
There's 10 already there.
10,000 standing.
40% more are going to pop up.
Correct. They're all coming in. You're already looking at that market. You're looking at about 24 months of supply, typically 6 to 6.9 months. 6 to 6.9. Realtor industry saying it's 9 months.
You need to be on those nationals talk shows to get all those buyers that come down with all their money to buoy us up down here. So these hedge funds are going to go and they're going to start buying buildings. And what do they do? Yeah,
they're going to try to buy them. Well, the key is you got to buy them cheap. You got to buy them very cheap. And how do you know if you're buying them cheap? You look at the rent and what the price is, because it's all just numbers in a condo. So once they start to buy them, they'll probably rent them out. I mean, listen, last go around, we were going in and taking out blocks and as well as entire buildings of condos. And you know what some of the buyers did? They had these units. They were raw, basically developer friendly or developer design ready. They laid down carpeting. You have $1 million condo and you got some cheap ass carpeting that was laid in there. And the reason that the buyers did it is they wanted to be the ability to resell to somebody who could lay their own flooring. So this is the way hedge funds work. This is the way the private equity works. They're simply looking at it as an investment, and they're simply going to move it and they're going to rent it in the meantime. So you don't want to make a commitment. You want the next buyer downstream who's going to pay you a premium. They have the ability to control everything. And that's what we're probably going to see once again.
Remind everybody again what happened during the pandemic.
So to kind of walk you through it, our market, we were coming out of the great South Florida condo boom and bust of 2002 to 2011. We started building again in 12. We were getting ready to crash in 17, 18. At the time, President Trump in his first administration, he started to jawbone Jerome Powell, much like we're seeing today, about bring down interest rates. Powell caved, brought down interest rates, gave a lifeline to people who were in the process of going under in the condo market here. Because of that lifeline, they were able to continue on. We had the pandemic hit in March of 2020, roughly. We saw it pull back dramatically in pricing. The following year in 2021, all of a sudden it was announced that you didn't have to wear a mask in Florida while other states were mandating it, and you could work from home. So people flooded into our market. The summer of 2019, we did about 18,000 condo sales in the Tri-County. And the summer of 2021, we did 28,000. What are we doing today? What did we do this previous summer? 12,000. We're down 57% transaction-wise from where we were in 2021. And you know what happened during the boom and bust of 02 to 11? The sales bottomed in 2008, and the prices bottomed 2010. So remember, sales go first. Owners are stuck with it, and eventually they cave. Once they cave, the prices start to unravel. So the question is, have we bottomed on transactions yet? And if we have, that means the discounting pricing probably is in the process of coming. But it could take 2 years.
Okay, so people are going to come in, they're going to buy up these condos,
yep,
and then they're going to hold them for a while, and they're going to do it at a profit, which means that...
Yeah, no, these are going to be real investors. The real investors making money every year on their condo. The speculators buying a condo, betting that it's going to go up, and in the meantime, they're subsidizing a tenant to live in there because the rent does not cover what the carry is.
I remember not too many years ago, maybe 10 or 15 at this point, where these kids were renting these huge condos downtown for $3,000. They'd got like 6 or 7 kids in there having a good time. And it was like, you couldn't even rent over here in South Miami.
Well, it's because it's cash flow. I mean, listen, if you want to know if the economy's doing well, you want to know if a restaurant's doing well, look at happy hours. If they are offering all kind of happy hours, they need cash coming in. in order to keep it working. If everything is great, why would you do a happy hour?
Yep.
And that's effectively what these condos do, these landlords do. They put on a happy hour for somebody can come in there because they need cash flow, kind of keep the lights on, and then they'll tap on their savings to cover it until the market ultimately turns.
There was a piece of real estate here in Miami. Big real estate trust had it. They paid $140 million. Pretty big piece. That was in probably during the pandemic, right at the beginning. So a private group came in and they paid $60 million for it. I think now it's worth $250, and they haven't done anything. They just held on to it.
It's all about timing. If you get in at the right time, I mean, listen, a developer who gets in at the right time in a market, their profit margin is 50%. So when you go in there and they tell you $1,000 a foot, they're putting $500 a foot in their pocket. Yeah. Best case scenario. But now when the market blends out, they might only be putting 30% in. And let me tell you something too. When the market bottoms out, land loses its value. Because there's nothing you can do with it unless you're going to bring in food trucks and try to sell beer and wine or something. You can't do anything with the dirt. Maybe you put up a temporary soccer, rental where people can come in, they can hire the soccer field and they can play. But other than that, you can't do anything with land in the downward market, and that's what we're facing.
And what's the mortgage rate right now, more or less?
Well, Federal Reserve Chairman Jerome Powell is going to be announcing today what the Fed's doing. We're in January, one of his last meetings before he's ultimately out in May. And expectations are that they are going to keep interest rates steady. And if they keep interest rates steady, that means mortgages are coming in about 6.15 or so. Many industry watchers say it needs to start with a 4 handle. Right now we have a 6 handle in order to get people off the couch and have them forsake the mortgage rates they have today, which are typically 4% or less because of the pandemic and the dramatic cut that we had in interest rates back then.
So what's the next 6 months to a year look like?
So I think what happens now is as we get closer to the Coconut Grove Arts Festival and the Miami Beach Boat Show, you'll have these people pivot. You'll see the sellers who need to get out. They will be bold. They'll start to cut prices dramatically. Buyers will start to come in. They'll look at it. They'll probably get the stuff under contract. We'll probably see a surge in sales once the summer comes. These will be the deals that are started now. They'll probably start to close in summer. And like a property appraiser told me, it takes 4 transactions in a building to reset the pricing. So by the time these deals are put on the board, you'll see recalibration of pricing. We'll get into the summer. You'll probably see prices continue to go down. And I would venture to guess a year from now, prices where they are today or prices where they are a year from now are going to be much less than where they are today because of the downward pressure, even with the cut in mortgage rates. Because remember, we have an immigration policy right now that may or may not be welcoming to foreign buyers. Miami Realtor Association just came out with a report. They're saying 52% now of pre-construction buyers are coming from abroad, of which the super majority is from Latin America. And guess who's being targeted right now by the ICE operation? So it's not a political statement. It's a statement of who is your demographic, who is your target market, and you're basically vilifying 52% of your pre-construction buyers, according to the Realtor Association study.
So all this stuff is all connected.
Everything is interconnected, and so are houses. So if you're living in a house and you think, well, everything's fine, it's a condo problem. No. A lot of people who live horizontally in a house, they're making their money off the vertical. They're doing tile, they're doing construction, they're doing insurance, they're property managers, they're security, engineers. A lot of people live off of the condo world, including municipalities, including school boards, including counties.
And more or less, how many people are living downtown now?
Well, we're coming up to 60,000 units in greater downtown Miami.
Wait, 60,000 units?
Units. So what we typically say is 1.5 people per unit. More importantly, 0.5 dogs. Check out how much green space there is. So never walk in the grass in greater downtown Miami because 60,000 units and 0.5 dogs.
So I got 90,000 people, more or less.
More or less, yep.
The city of Coral Gables over a pretty big area is like 50,000, Doral around 50.
Yep.
Pinecrest, 11 to 15,000, South Miami in that range. So it's a lot of people, very concentrated area.
Very concentrated area, but the thing is a lot of them have mobility, meaning because they're renting from some landlord who overpaid on a condo, these people could pick up and bail, which leads us to a report I put out this week. So what had happened to South Beach was the thing. South Beach was hot. Everybody's got to go into South Beach. In the city of Miami in about 2000, I don't know if you remember this, U.S. Census came out and called Miami one of the poorest big cities in the country.
Yes.
If not number one.
Yep.
So remember, New Times wrote a piece. We're number one.
Yes.
And what happened, Manny Diaz, the mayor of Miami, ultimately moved forward with a plan called Miami 21, which was to expand and blow out density. Because he was saying, if everybody's flying into Miami International Airport to get onto MacArthur and they're going into Miami Beach, we're missing all that traffic. So they made this real aggressive, let's put it all up in greater downtown Miami. So what happened is over the course of time, people started leaving the beach for the old product and moving into Greater Downtown Miami. Now, because of pricing in Greater Downtown Miami, it looks as if people will probably find better value living in South Beach than Greater Downtown Miami. So we might actually see a reversal of the last 10 to 15 years, and we're starting to see it in the numbers. I might be a little bit ahead of the curve, but I always get accused of being too early. Remember, you can always, it's better to leave too early than leave too late.
Yes.
Then you got to do the cleanup.
Okay, so what could you tell us about residential market? What's your gut feeling?
So generally speaking about the residential market, we just had a big report that came out talking about consumer confidence. Consumer confidence is plummeting. People are concerned. They're worried about their jobs. They're worried that either AI is going to take it, or maybe their company is going to shrink. They're going to cut employees. So people are sort of a wait and see type of mode. And when they're a wait and see mode, they don't want to spend a lot of money. If you go out at night, we're at the peak of the winter buying season in South Florida. I was in Coconut Grove last night. There's nobody. There's nobody in the main. I mean, it's not like bustling. It's not like overwhelming. I would say, generally speaking, traffic is overall down. People are worried about their jobs. The U.S. dollar is losing value against foreign currencies. We have a whole bunch of different, and more importantly, gold has just hit another record high. We're talking $5,200 an ounce or something. So, it's getting very, very, very expensive. A lot of people sitting on the sidelines. And if you're not optimistic and you're not pessimistic and you're sort of stuck in purgatory, what are you going to do? You're going to sit idle, which is the last thing real estate wants.
We bought a few silver dollars.
There we go.
3 months ago to give my grandkids. Yep. I've been sitting in the closet for them to get older. It tripled.
That's right.
And it's like, huh? So the guy who arranged it for me, you should have known. I said, who knows? If you knew, you would have done it, right? But that's what happens.
And people are going into hard assets because they're afraid of inflation. They're afraid of what could be coming down the pike. These are some of the issues. If you're into certain stocks in the stock market, you might be doing very well. But any kind of pullback, any kind of head for the exits, a black swan, who's to say where it goes? So I would just say, listen, if you're out there and you're concerned about things, the best thing you can do is pretty much sit tight, ride it out, and keep your eyes open, because there's a lot of spin going on. And if you are a seller, you probably got about a 3-month window before it starts to change. Single family house would be different because people buy for schools and things like that. But condos, you're coming up to the wrong side of the curve.
Years ago, I bought into a condo across from Dadeland, and it wasn't built. It took 2 years or 3 years. And so I said, all right, my kids moved out of it. So we said, we're going to sell it. This is the price. We started here. 2 months later, it's still there. And the agent, who was a friend, didn't want to tell me that it was the wrong price. I said, just tell me what they're selling for. Knocked up $20,000, $25,000. That was the end of it, all right? Because the maintenance back then was $1,000 a month. Back then. And I keep thinking, I'm going to be losing $1,000 a month. How many months plus the grief? All right, plus all the other stuff that happens. So I understand sellers, maybe they want to get out to just take a haircut. It won't be like yours, but it'll be a little different, right? And then they can move on to something else. All right, so real estate market, vintage condos are going to be selling like crazy.
Yeah, everybody's going into vintage, assuming they have a signed inspection report, and there's a roadmap of how long it's going to take to get the work done. But if you are an investor, you probably want to, and here's the other advantage of vintage. Vintage condos, 30 years or more, they were built in better locations, because there was more land.
Yes.
So you got a better location, and you probably have more, if you're going to live there, you got more room. It's not as good from an investor. And the reason you have more room is back then, a 1-bedroom would be like 1,000, 1,200 square feet. A 2-bedroom would be like 2,000. Today, 1-bedroom is 700, 750 square feet, and a 2-bedroom is 1,000. So if you are going to live there, you probably want a vintage. And if you can get a 52% discount or off of the overall market, like South Beach, how do you really go wrong?
And you point out South Beach, it lost its pizzazz.
But pricing might actually bring it back, because downtown Miami has gotten so far ahead of its skis. It is so expensive. It's kind of like the Yogi Berra quote. I don't know if anybody's a baseball fan. There was this famous catcher, Hall of Fame, New York Yankees. He always said these crazy things, but somehow they made sense. And what he says is nobody goes there anymore because it's so popular. That's kind of what's happening in the greater downtown Miami. It's getting to the point where it's losing its luster. It is overwhelming. The density, the walking. I walk at the traffic. It's got a different feel. And now suddenly South Beach seems like a pleasant alternative. And if it's discounted again, it's greater downtown Miami. So watch for that trend as we go forward. South Beach suddenly becoming popular again, and it's all due to pricing and density.
So Peter, you have some shows, your own shows coming up. Where can people find you?
They can always find me at MiamiCondo.club. I do a live stream every day.
I think we're going to put it up there. There we go.
I do a live stream every weekday at 4 o'clock. Every single weekday.
From greater downtown Miami.
From greater downtown Miami.
And I read your stuff. As a matter of fact, that's where I got this marvelous thing.
Fantastic.
Yes.
Yeah, no, we're always putting out stuff. And Saturdays we do tours. And what I would tell people is, listen, if you're going to go into a condo, find the building. And then how do you figure out which building makes sense? That's what we do on our tours. We teach you how to analyze buildings. And I'm not trying to pitch the tour. I kind of am. But what I'm telling you is you need to understand the building. Do not rely on Zillow. Zillow went all in using its Zestimate, okay? And you know what Zillow found? They had to liquidate at a loss their portfolio because they used their Zestimate to buy it. And look that up. Yeah. Look up. Yeah, you remember. Yeah, so you got to do your own research. Get in there and figure out what makes sense.
Okay, and you typically have a guest, so like a co-host?
Oh, on our podcast, yeah. Yes. Typically we do it on Tuesdays. I do a market trend story or report. So Tuesdays is always good. That's one to check in. And then Mondays I do it. My partner Jenny Huertas, CVR Realty. Friday I do it. Daniel Hernandez from Compass. And then Wednesday and Thursday I have the various guests on.
Wonderful.
Yeah,
Peter, thank you so much.
Michael, It's always a pleasure.
And you're always fun. Let's look at this camera right here. Remember, folks, we subscribe to the Disney Channel rule, which is when you hug someone, don't stop until